Major funding for these broadcasts is made possible by grants from Capital One Bank, New York Community Bank, Eastern Consolidated, M&T Bank, Sterling National Bank, Meridian Capital Group, Customers Bank, Ariel Property Advisors, Dime Community Bank. Additional funding is made possible by grants from AM Trust Title, AVR Realty Company, Avison Young, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Chase Commercial Term Lending, Chase Commercial Mortgage, Citizens Bank, CPEX Real Estate Services, Colliers International NYC, Cohen Equities, Collins Building Services, Douglaston Development, Levine Builders, Flushing Bank, Friedman LLP, Handler Real Estate Organization, Handro Properties, Hodges Ward Elliott Inc., Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, Kilroy Architectural Windows, Madison Realty Capital, Matone Group, Mercantile Bank, New Banks, Newmark Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rockefeller Group, Rosewood Realty Group, SJP Properties, Stonehenge Partners, TD Bank, Terra CRG, the Meringoff Family Foundation, the Moynihan Organization, Moynihan Capital Partners, and these friends.
It's called the Garden State. It's a place where there's lots of things taking place. So today, with the help of my executive producer, Debra, I've brought together a group of individuals to say, what's happening in the Garden State with regard to real estate and business and banking? My guest, as I said, is Debra Tantleff, who is the principal of Tantum Realty. Leslie Anderson, who is the executive director of the New Jersey Redevelopment Authority. A partner in crime over here, Darryl Godfrey, who is the Director of Business Development, the New Jersey Redevelopment Authority. And last but not least, our banker, Colleen, Vice President of M&T Bank. So what's happening in New Jersey, Debra? You're active in all different fronts. Let's talk supportive housing, housing for former military, transit-oriented developments, community. What's going on in your mind?
So we do our own developments as well as a lot of advisory for a lot of other commercial industrial owners and property owners. And I think generally speaking, there's a flight to urbanize suburbia and to invest in the urban cores. We're at a critical period where the social and demographic trends are pushing people to move back into the cities or to stay in their downtowns, and a lot of municipalities are trying to figure out how to create these very dynamic, animated spaces. Coupled with that, you're seeing a legislative overhaul where municipalities are now at a critical point where they have to deliver a certain amount of affordable housing. So from a residential market perspective, there's an incredible perfect storm of events where there's tremendous amount of investment, both private and public sector investment, as well as the legislative and political will to start to see the need and opportunity to move multifamily and mixed-use projects forward.
Leslie, tell me about the authority.
The New Jersey Redevelopment Authority, this is an exciting time. Thank you for the opportunity to be here. We're 20 years old this year. We've seen $400 million in investment.
And you've been there since the beginning, correct? Since
the beginning, yes, sir.
8 governors.
Yes, sir.
Right.
And it's been very exciting. We've leveraged $3.4 billion in investment from other sources. So what we are essentially is the first in financing entity to jumpstart projects in New Jersey's most urbanized communities. We look at Newark, we look at Jersey City, we look at Patterson, but we also look at Plainfield, East Orange, Burlington. You know, our job is to be in there first, to serve as a catalyst to attract.
So you're basically talking about communities where there's more need for gentrification.
In a good way.
No,
yes, absolutely.
I'm basically saying that. Okay, we're talking about certain communities that have seen some difficult times over the years. Okay,
yes.
And you know, people think of Jersey City as a great community, which it is, but people forget that 15, 20 years ago, Jersey City was not Jersey City of today. The same thing of people 20 years ago, or even 10 years ago, or 5 years ago, think of Newark in a different case. Patterson, people don't realize, was like, you know, one of the leading textile places in the mills, and Patterson has not seen its better day, but today it's getting over there. And the same thing like what you said about Point Pleasant and the other, the community over there near Red Bank, Long Branch,
yes,
over there.
Yes, those cities saw a high level of disinvestment initially in the 60s. There were some jump start to projects in the 70s. They saw some traction in the 80s. But what they're really beginning to see now is sustainable development. And I think the Redevelopment Authority has played a role in that, because we come in and stabilize a community, not only with our financing product, but our technical assistance, to help these communities understand how to undertake redevelopment so that the projects that get financed are long lasting and benefit not only financially, but they also are a benefit to the community.
What's your role at the authority?
Primarily to get the money out and get it back.
You know, sitting next to a banker.
Okay. I'm open for business for both of you. Make sure
You know what? This is a comment that one of my dear friends who's in the credit union business would say. I said, how's business? He said, I just got paid off. I said, it's always nice to get paid off, because at least you know you can re-employ the money for somewhere else.
Yes, and that's exactly what my job is, to tell them that I'm in there for the short term, I want my money back, but more importantly, I want to see the deal happen.
Let's talk about those type of deals that you see, the two of you.
It ranges. So in the case of a housing deal, we're the acquisition. So we prime the pump and make it very easy for Colleen to step in and provide the construction or the permanent financing. So we provide those acquisition
And where do you get
dollars.
your money?
I'm so happy you asked that. Our last appropriation from the state was in 2002. So
how could you operate 15 years without $1 of appropriation?
Well, that goes to Darryl's point of getting it out and getting it back in. So like a bank, we charge interest, we charge fees, and we get repaid on that principal. So that's how we stay alive. So we're the state, so we're much more relaxed, and our investor is our shareholder is the taxpayer. So they want to see that we get a return on that investment. We do take higher risk, but I think because we're a partner in the deal, and sometimes, candidly, deals go bad, but we stay in there. I just did a workshop about 3 weeks ago of reigniting stalled projects, where they were our projects, they were stalled. We had fully provisioned on our financials, and we were fully repaid on 2 of the 3 projects.
So in essence, you are like a bank.
Yes.
Similar over there. Not like the 800-pound gorilla, no offense, Colleen, of M&T, who's a $120 billion bank today. But you take higher risks.
Yes. Yes.
And when people take higher risks, you also should take higher rewards.
And I think we do. The reward is when the repayment comes back in and we're able to redeploy it back out into these same communities. But when we see these projects get done and the impact they have on the community, it's tremendous. And what we also are really great at, we're a great leverager, right? So we may put $1 million into a $17 million project. So our leverage ratio is anywhere from 17 to 1. So that's what we're also good at in terms of getting others to put their dollars in, because we're there first.
So here's the question. You as a bank, how do you like getting involved where they're part of the capital stack, as they would say?
We love to work with our, private and public partners. You know, we're about serving our clients in any capacity in a lot of asset classes. So not just housing, but you know, all types of market rate projects, affordable mixed projects, and also in the commercial space, office or retail or industrial, which is.
Now, are you limited to only residential?
No, we look at a range of projects, and primarily we're on the front end of residential. In New Jersey, we have an agency called the New Jersey Housing and Mortgage Finance Agency, and they primarily, in partnership, they issue the low-income housing tax credits, but they also provide the permanent and the construction financing. So we come in the very, very beginning in the pre-development acquisition phase, and they're usually our takeout source, and you can go there. But you can also go to a bank. We don't mind who the back-end partner is.
So let's identify a type of transaction that all of you could be involved with over here. You're working on a supportive housing.
So we're doing a boutique scale veteran affordable housing project. And Leslie and Darryl were the first people I went to go sit down with and said, it's a small project, it doesn't fit in the tax credit arena, how do we make this work? And we were looking at pre-development funding dollars and other incentive and grant programs that might be available to a for-profit private developer. So we didn't necessarily fit in the box. And then we were able to work with Colleen on the traditional debt side because we were able to pull together other public stacks of funding, trust fund money, home money. But what's important
What do you mean trust fund money?
So in New Jersey, when you're developing a market rate project and there's an affordable housing obligation, historically, many developers have paid into municipalities have housing trust funds.
Okay, the housing
and then they
trust
can take
funds.
that money and fund another project. And
As opposed to building the affordable units on the development site.
Correct. So what's happening now in the space, you know, in the residential space is housing projects are no longer just housing projects. Mixed use has transformed, retail has transformed, office has transformed. So the traditional straight residential project no longer really exists. So the conversation now really comes on the onus of the developer to sit down with the public and private sectors to figure out how do we put these creative mixed use projects together and how do we do these creative capital stacks that are traditional debt, that are developer equity, but that have some very meaningful, teethy and meaty public programs that give me as the developer the comfort level that it's worth me putting my equity in, and more importantly, give the lender like Colleen comfort that my relationship is worthy of her giving me the loan, but more importantly, that this project is really going to move forward.
But you brought up at the beginning of the show, I'm hearing it continuing over here, is that we talk about affordable housing. And I believe that many municipalities do not have enough affordable housing. And you just alluded to the fact that people take the money to the trust fund. They give, as opposed to building the housing, they say, I'll pay this bounty or this pound over there to the fund, and that money can be utilized later to build certain affordable housing. Would you say New Jersey is building enough affordable housing today?
I think a lot of municipalities would say they would still have a need to fill affordable housing. There's definitely always an affordable housing need, and I think even government
now,
states.
When you were at Brick City, how much was it housing or was it business development?
Brick City was more business development, focused on a small business individual entrepreneur who wanted to come into Newark, primarily on Halsey Street, and redirect into a studio. So that's what the primary focus of Brick City.
Right now, you're still involved with the city of Newark on developments in your new role.
Yes, yes.
So what's the difference between the Brick City work and the Redevelopment Authority's work?
The big difference is real estate. And so we've done deals in conjunction with the city of Newark and the banking community to really push the deal forward. You know, we did a unconventional one, a merit charter school, where we aligned ourselves with Ron Bate, who did Teachers Village. We came in there through really the luck of Leslie just meeting him one day, and we did a new markets tax credit deal, $10 million into new markets tax credit into a merit charter school in Newark. That was totally unconventional, something we traditionally wouldn't do, but it helps them help with the Teachers Village project.
Now, what's happening? I heard Patterson, and I know that you're involved with projects all over the state. What's happening in Patterson on your side?
It's funny you bring up Patterson. Darryl brought a project to me, and he walked in, and I said, "No, I'm not doing it." It was an IHOP, and it was located in this mall is very critical to Patterson. It's in their downtown. It is near City Hall. It is near county offices. But it wasn't something that we were traditionally interested in. We don't do businesses within a mall financing. But we took a step back and looked at what Patterson needed. And we were able to work with IHOP nationally. We were able to work with the franchisee to structure the financing so that it made sense. And it created critical jobs for Patterson. And it also stabilized the mall that was going through some difficult
Now, was
times.
this an enclosed mall, or?
Yes, it's an enclosed mall. Yes, yes. And normally it took us out of our comfort zone. But one of the things that I think, if you start talking about trending, if as entities that finance, you don't move out of your comfort zone. If anything, what the market downturn taught us, it taught us how to be more responsible in how we did our lending. But what it also said was get out of the comfort zone of this cookie cutter approach to how you do financing. And I think our success 20 years later is the ability to look at the value of the project, its impact on the community, and also assess the risk and our ability to be repaid. And we're getting repaid, and we're also secure on the loan as well.
I think that's a little bit what we do. We don't necessarily, we really view who the sponsor is, who the project is. We're heavily entrenched in our northern and central New Jersey communities, in our commercial real estate space, trying to serve our clients, whatever those needs are. And it's really project specific and who's asking, and we don't necessarily need to work in a box.
Well, one of the benefits of certain parts of New Jersey is the transit-oriented developments, okay? Are we seeing more financing, more projects taking place today? Are developers going into downtowns in New Jersey today?
Absolutely.
Where's the majority? I mean,
I think a lot of the traditional developer interest is, it's very catchy and very easy to say, I want to be in a transit-oriented location.
Yeah, but not everybody understands.
Not everybody understands what that means, right? What is the efficiency of our transportation and infrastructure system, and how many urban cores are really like a Jersey City where it's a one-seat ride into Manhattan that's quick and efficient. So I think that there is still a tremendous amount of private developer investment appetite. I think that you are starting to see more of the commercial sector who's now interested in diversifying their portfolio and trying to figure out how to reposition some of their excess land or distressed assets, realizing that we are no longer working in silos of apartments, office, retail, and how do we create these dynamic environments. So transit-oriented development becomes that opportunity to create the critical mass and create that density and create that sense of place. And the transportation becomes a really good amenity to service everything that you're putting there. Where is that transit going? Where is that person going on a daily basis? Those are some of the variables town to town, but there's still, generally speaking, I think, a very strong appetite for private and public investment in transportation because, our transportation infrastructure is how we're going to grow.
Leslie and Darryl brought up the mall, and New Jersey has been a place. I still remember the late Jerry Gottesman saying to me, why Newark have the difficulties over the years? He said because the malls went out to Short Hills, so people moved out of Newark because there was the leaving of the city over there. There's no question that e-commerce is having an effect on the nation and in New Jersey. What's happening to the malls in New Jersey? Not the Short Hills Mall, the other ones. What's happening, and how, as a bank, as a redevelopment authority, as a developer, do you see the reuse of maybe these malls?
So malls today are sort of segregating themselves to the high-end, top-tier malls and then the lower-tier malls. So there's still a space for them, and you're going to see more stratification, the ones that perform well and the ones that don't. And then in between malls in the retail space, New Jersey is still performing relatively well compared to the rest of the country. we're in like the mid 9% vacancy rate for retail in central and northern New Jersey. It's steady. And that's a positive thing. We're still, as a bank, we review all the opportunities. Grocery anchored is obviously stronger mall, and you watch our community shopping center concept. But we're careful, and we look at, who the tenants are. Is it service? Are you, especially in a transit-oriented development project, these mixed-use concepts, the retail there is really,
No, that's important. But I'm really talking about, the changing, the repositioning of the malls on one subject. I'm also talking about the repositioning of office properties, because similar to Westchester, many of the New Jersey office buildings have been are in the process of being repositioned. How do you as a developer look at that, and how do you as lenders look at the repositioning of taking this 1970s building, which really is not being utilized, corporations are no longer there, the pharma has left New Jersey to certain levels. How do you do the repositioning?
So I think in the next 2 years, there's going to be a number of the typical strip center notes that come due, and those will be primed for redevelopment. But in our advisory capacity, we work with a lot of commercial owners where we're looking at repositioning and redeveloping the entire asset. So either it will be a smaller office component, and then there will be a bifurcated housing component with an inclusionary affordable housing element, or there's a hotel component. I think you're seeing a lot of shopping centers that are looking at their major anchor tenant going out, and they're trying to figure out, do you get the new iPic movie theater in that becomes this experiential movie experience as opposed to just going and sitting and watching a movie? So I think some of the changes in the experiential retail and some of the service type of larger users are going to translate into the shopping centers. I think you're going into the shopping malls, but I think in terms of the traditional New Jersey highway strip center, you will see a lot of those assets come due and start to get repositioned and redeveloped.
And as lenders, how do you see it? Because you're the money source. Okay? she's the thoughts.
We're very tuned to obviously credit worthiness of the tenants, and we watch exposure.
But let's look at the reality.
Right.
For them to do an IHOP was difficult. For you to do an IHOP would even be harder, possibly, because fast casual restaurants are not an easy item in certain markets. I do remember M&T did take the initiative, the New York office, a number of years ago to do a deal in Clifton, which had a lot of restaurants, and it was difficult, but you had a very strong sponsor over there. That was Briard Company. But, when it comes to certain, it's like the hospitality industry. You got to have each day the room has to be booked. It's a different case.
Right, but I think to Leslie's point, one of the good things here with us, we look outside the box. With Patterson, what we were primarily looking for was, foot traffic. And foot traffic, that IHOP would bring that into that mall. As a lender, you talk about character. We knew the individual had an IHOP in Irvington. Also, we knew her partners. And so we knew the character, we knew the cash flow, but we knew the area. And that's why we're in 69 urban areas in New Jersey. So we know the customer before.
You're in 69 urban areas?
Yes.
So that's from one tip south, one tip north.
We go as far south as Salem City, which is very far south.
Yes.
Now,
you can see the Delaware Memorial Bridge from Salem City.
Yes.
Now, you're lending in the entire state of New Jersey?
Yeah, we do have our Philadelphia team covers South Jersey.
With regard to that, Red Bank, a great neighborhood over the years, what are you doing there, and what's the banks doing in this community? Because I love the water, the way the town is set up and everything.
Yeah, so Monmouth County is really interesting. I think it's rich with opportunities, and it's an amazing place to live. So we're working on a boutique scale, 35-unit development right on the river, and a block from downtown, and about 0.4 of a mile from the train station. And we're going to be targeting, we'll be breaking ground next month, and it'll be targeting young professionals and empty nesters, the two bookend demographics who want to be in Red Bank. Red Bank is one of those suburban, urban light towns that's got a great downtown. It's got a great restaurant scene. It's got an amazing performing arts theater. And there's great modes of transportation. There's the ferry nearby, the train into Manhattan. So there's a lot of activity happening in Red Bank on a smaller scale, because unlike an urban market like Jersey City or Patterson that's meant for dense, high-rise product, you're gonna develop and operate in a more boutique mid-rise scale product that's anywhere from 35 units to 150 units, which in each of those projects individually really doesn't move the needle in terms of changing the market, but it just reinforces the fabric of that community because you're bringing in that dedicated constituent base.
What about Asbury Park? I noticed that there was a recent article talking that the New Jersey PAC is going to be doing some developments. They just opened up the new hotel, which was in the former Salvation Army building. There are some new condos being there.
It's exciting. When I started, Asbury Park was stuck in an unfortunate situation where they were being held hostage to a developer who essentially defaulted on the redeveloper agreement but wasn't willing to walk away. So to fast forward all of these years and to see the amount of development that's happening, when you drive that corridor along Ocean Avenue and you see the success, when you have the asset of the Atlantic Ocean, but you don't see the community that's able to take advantage of it, Asbury Park is in a great sweet spot. The challenge for Asbury Park, though, is to translate that to the other side of the tracks into those neighborhoods where the people live. And I think that that's going to be a place where we're going to play a significant role in saying that we love the waterfront development, but it has to translate. There's some good nonprofit developers down there right now who usually serve as a catalyst. The group is called Interfaith Partners. They're doing great work in Asbury Park and Neptune. And what's also interesting is that we see boundaries in these communities and the people that live there don't.
What about Fort Monmouth? I mean, it's a major development site.
Traction is happening there as well. I think one of the great things that the state did was to ask the New Jersey Economic Development Authority to come in. They created an entity that's overseeing it. So a lot of the development is beginning to come online there as well, because they not only lost the Fort Monmouth, they lost the people. So the people who lived in the outerlying neighborhoods moved and took jobs where Fort Monmouth moved.
I mean, it was a huge complex. You had at least 20, 30,000 people who worked.
And they're taking a macro approach to looking at how do you chop that site up and how does it ultimately get redeveloped. And for us, it takes time for it to be done. I think I said it earlier, you want it to be sustainable and you want it to have value to the community. And that's where they are right now, is they took the time to assess, they took the time to look at the environmental concerns, because when you look at an Army facility like that, there is some contamination. So how do we move it forward so that when Colleen does come in, those phase ones are done, the remediation is done, and the project can move forward. Even for Deb, I think the state took on some of that upfront work at Fort Monmouth so that it would be attractive to a developer, whether it's a large-scale development, or I like the idea of boutique, because for me, at the end of the day, the projects that make a difference aren't those really big ones, but those are smaller projects that impact the community immediately and make a difference either by attracting people to come in or allowing people to remain in the community in housing or commercial developments that are improved.
One last question. I really only have like a minute. Camden, a community that was the home of Campbell's Soup, which is allegedly some major development. Oh, do we see that taking place?
It's seeing a renaissance. It's seeing a comeback. I think the city is together. I think Cooper's Ferry being the economic development arm to the city, a lot of the upfront investment from the state is coming to fruition. So Cooper Hospital is an anchor, Rutgers Camden is an anchor, as well as Rowan University, and the world has changed.
So I'd like to thank my executive producer, Debra, who brought Leslie, who brought Godfrey, and Colleen, and I'll thank you, and I'll see you next week.